Well, thanks so much for tuning into this edition of IPO Adda. Specialty chemicals is a space that is red hot. Almost every company worth its salt has done very well, and that's prompted a bunch of companies which are not listed as well to get listed. We've seen that trend happen in the better part of 2020. And one more very interesting name joins that list of companies that will be listed soon from the specialty chemical space, Anupam Rasayan. And the top management deck is with us today to talk about what Anupam Rasayan is all about and how do they expect to grow over the next maybe 3 to 5 years, which could probably help you take the decision of whether or not to invest in the IPO. Mr. Anand Desai and Mr. Dr. Kiran Patel join us right now. They are the top management honchos at Anupam Rasayan. And gentlemen, both of you, good morning and good evening respectively. Can I start off, and either of you can take this question, and please feel free to come in. What is Anupam Rasayan all about?
So,
Anand.
yeah, we are a specialty manufacturing company. We are focused on agrochemicals, polymer science, pharma, and personal care. We manufacture very niche, customized products for strategic MNCs like Syngenta, Sumitomo, Adama, and others. Our core focus is always working upon and around complex chemistries and process optimization and innovation. This is what is Anupam all about.
Yeah. Dr. Patel, you want to add something to that? Because almost all companies that are there in the space are in some fashion or the other producing niche specialty chemicals for a sector or the other. What sets Anupam Rasayan apart?
I think first and foremost, a majority of our clientele is international. The second portion of our focus is to look at products that many countries were solely dependent on China for. And we believe that India is a strong competition to China as long as you have innovation in place, and our company is primarily focused in that arena. We have got over 80 scientists that will be now working in our R&D department. So our primary focus is really on R&D and doing things that other people have not thought about or are not there to reach.
Okay. So in light of that, and again, a question to either of you, what is it that has become that unique selling point from Anupam Rasayan's products? I mean, is there a moat around the businesses that you have? Is there a very large market share within this, within either the custom synthesis or the manufacturing specialty chemicals in either of the two segments?
So basically, we are doing some chemistries which are different, and which is what is differentiating us from the other companies. At the same time, this chemistry is under a single roof is what differentiates us again. Yes.
Okay. Italy, I would love to probe you a bit more on these before we get to numbers. What is it that you are doing which is unique in that nature? And does this uniqueness, because I heard you mention that you are trying to think ahead of the curve in trying to develop products which people have not even thought about, etc. How does this work? Because the reason, again, I'm asking this to you is when I speak to a lot of your peer sets, all of them are trying to do the same in one vertical or the other. And, you know, specialty chemicals as space is now really mushroomed and come to the fore. People would love to understand from you, what is it that is setting you apart? What kind of return ratios are you getting by virtue of the moats that you're setting up around your businesses? And what's the kind of market share that you enjoy in 1 or 2 or 3 of the key products that you manufacture?
Yeah, so basically what happens is that when you have a capex run already, and in that capex, if you're differentiated in your chemistries, that is what drives the customer to look at you from a long-term perspective. And so if you have capex ready, if you have capacities available with you, that is what can be a differentiating factor for a company to get more business from a customer. So this is what is really the most important point, and that is what Anupam has done in the last 5 years, that we have done a capex of almost 800 crores, which was front-ended by us based on customer commitment, and which is we are going to sweat now going ahead. So this is so capex availability is something which is very important for our customer to look at, and that is where we are placed now.
Okay. And would you have dominant market share in any 1, 2, 3 key products that you are supplying to customers across the world?
Yeah, in Anupam's case, in many products we are sole suppliers, and in most of the products, either we are the primary or the secondary supplier.
Okay, and is there, I mean, is there a market share concept when you're supplying products on the global arena? Are there global competitors which are large and in the same field that you might be in?
Yeah, so we compete with people in Germany, with people in China, and even in Japan, for that matter. And to be honest, over there we are either the primary or the secondary supplier of those products.
Okay, okay. What are, I mean, so I was looking, okay, let's try and then get to the issue as well. If I'm not wrong, the proceeds of the issue are going to be used largely to repay debt. Is this the same debt that you may have taken in order to fund the capex that you spoke about just a minute ago?
Yeah, that is correct. Yes.
Okay, and are there plans to set up further capacities, or do you believe the current capacities hold you in good stead for the next couple of years?
So for the next 2 or 3 years, we should be able to sweat out this capacity which you have put in the last 5 years, and after, maybe in the future, maybe next year, we will again take a call as to we should go for a new round of capex or not.
Okay, so
Niraj, what
yes,
I
please.
would tell you is that the strategy that we have, first and foremost, we have reserve capacity already in place. But we are in a very unique position where the market demands are far greater than the capacity. So we will be making strategic decisions as to when we start doing further expansion. The beauty of Anupam is, anybody could throw money and make a plant. But when you have orders in hand or demand in hand and you are trying to catch up, then that's a very unique situation that we are enjoying right now. So it is very difficult for us to say exactly how things will move, but currently we have at least a significant bandwidth to meet some of our existing contracts, but we still have demands for more. So it's a balancing and juggling between trying to rapidly expand or do it in a sensible manner. So we are very focused in the direction of growth, and we believe in strategic growth and wise growth, not just a reckless top line or demand or whatever. So we are ready and poised to do it. With the debt being gone, we will have a significant capacity, both of debt and through the public market in equity. So we will be taking wise decisions for both organic and inorganic growth.
Sure. So, pardon me, Dr. Patel, but because people would want to have a sense of what could be the trajectory going ahead, one, are you trying to say that by virtue of the fact that there are large orders at hand and you have spare capacities, you would be able to pick and choose what products and what customers you will cater to over the next couple of years? Would that be a fair assessment?
Pick and choose, I don't know, but what I can tell you is we have more than enough orders to use our current bandwidth. And we will be very closely looking at other opportunities of expansion.
That will happen in the next 12 months, or would you next 12 months only believe in sweating out your assets, current assets?
See, it depends on who you ask. If you ask me, I say that when opportunities knock at the door, one should take advantage of it. In our industry, the lag period is significant. And if I don't do the capex at the right time, then those opportunities may no longer be there.
Is there is there a need to do capex over the next 6 months, Dr. Patel? Let me ask you that.
Well, at this stage, I will say no. But what I am telling is, if certain opportunity comes, I may not be against it, although my CFO may not want me to do it.
Sure.
Right?
I'm guessing you will prevail over him or her. Okay, Mr. Desai, Dr. Patel, whoever, just one more other question that I have with regards to this. I heard Anand Desai say that sweating of the current assets would be possible over the course of the next 12 to 24 months without taking the inorganic or a fresh capex move into account. Would it be safe to assume that by sweating out the assets and taking the capacity utilization levels higher over the next 12 to 18 months, operating leverage would kick in, and therefore your operational metrics and thereby your bottom line growth would look much better than your top line growth over the next 12 months, which may anyways be healthy, but I'm right now focusing on the operating mix and the bottom line numbers.
I
Yeah,
think
that is
you,
absolutely correct.
you hit it on the nail. And I'll let Anand answer, but you are perfectly right. And that's what we are anticipating and expecting, that the numbers will speak for itself. And we are very, very confident of the outcome to be very positive.
Okay. Anand, you want to add something to that?
Yeah, I'll have to add that we've been in the past every year we've been growing at around between 25 to 35% on the CAGR basis. That is what we anticipate to do in the future also.
No, so just correct me, Anand. I would love you to dwell on this. For H1 FY21, unless my numbers are wrong, your revenues grew by 51% at about 355 crores, but your bottom line was up about 21%, not at the same pace as the revenue. Are those numbers correct? And if so, would they change in the second half and for FY22?
Yeah, those numbers are correct. But every year, the third quarter, the fourth quarter are the most important quarters for the company, and that is where we derive major sales as well as the bottom lines will improve based on the better performance in the third and the fourth quarter.
Okay, so would it be fair, again, just repeating for the sake of repetition, but just clearing this out, that even if you grow revenues for FY22 and FY23 at the rate at which you've grown revenues in FY21, would that be possible? I know you can't give exact forward-looking statements because of severe restrictions, but some flavor about whether you can do the same in FY22 ballpark, and coupled with operating leverage, reduced interest costs because you're paying off the debt, your bottom line growth will be faster than that 50% top line growth. Would that be a fair assessment?
That would be a fair assessment, and that is what we've been performing in the past, and that is what we will continue to do in the future also.
Okay.
Because EBITDAs of 23 to 25% have been consistent since last 5 years, and that is what we anticipate to do in the future also.
Okay. Dr. Patel, one question. A lot of specialty chemical companies which have hit the street or are setting up new capacities are setting up fungible capacities as well in order to move the mix between a product 1 or product 2, depending on which product is gaining strength. Can you tell us a bit about how would Anupam's next 12 to 18 to 24 months trajectory be? Would it be fungible capacities? What products would drive growth? Because as I see in your first half as well, it's the life sciences led specialty chemicals which did really well and drove the lion's share of the revenue compared to the others. So give us some sense about that.
So I will, if you don't mind, let Anand answer this question.
Sure.
Because he is hands-on involved.
Anand, you want to come in then?
Then I will let answer that question.
Yeah, so this mix of product mix will continue going forward, and for the next 12 months to 18 months also, and we anticipate to keep on growing as what we've been doing in the past. Yeah.
But I would presume that if it's a life science related specialty chemicals which are critical in nature, then the pricing power as well as the return ratios on some of these products would be very high. What is it that you enjoy currently, Anand?
Our EBITDAs are between 24 to 25% since last many years, and this is what we anticipate going forward also. So as you mentioned, our operating leverage will improve, and that is where we intend to do a better showcasing on the bottom line.
So what happens on the return on capital employed, Anand? I mean, where is it currently, and how much do you expect to scale it up to?
Anand,
yeah, it is currently
Anand, if I'm not mistaken, the newer products that you are bringing on the pipeline has a larger margin, etc. And maybe you can elaborate that a little bit for him.
Sure.
Yeah, so basically, we are working on products currently between $10 to $20 per kilo. Going forward, the new products which we are bringing in, they will be between $35 to $40 per kilo in 100 tons weight. So that is one reason as to which our ROCs and ROEs will also improve. At the same time, our customers validate the plant and the product, and they grow the volume slowly. So that period has already passed now. So the ramp up on the volumes will also go up in the future. And that is how the top line will increase. At the same time, because of better operating leverage, better debt levels, or maybe with the zero debts, our bottom line should also improve drastically.
Yeah. So just last question, Anand, what are the return ratios currently and how do you expect to scale them up to, let's say, over 18 months? Forget the next 3 months, over 18-month period.
I will not be able to give you an exact picture in terms of numbers, but I can say that we intend to do an asset turn on around 1.5 times in the next 2 to 3 years.
Okay. Well, gentlemen, I could go on, but I'm understanding that you have limitations of time too, but this was informative in more ways than one. Thank you so much, both of you, for giving us a sense of what Anupam Rasayan is all about. And I wish you all the best for the IPO.
Thank you.
Thank you, Niraj. We
And
enjoyed it.
viewers, thanks for tuning into this edition of the IPO Adda.